Hello guys, this is Universalist FX and I want to welcome you guys today. Okay, in this video we are going to be talking about determining the daily bias for DXY and actually how to determine the daily bias for day traders. Okay, I'm actually going to be talking about something specifically here. Now, note what I am trying to talk about in this video. I'm not talking about the long-term bias or medium to long-term bias of the market. No, we all know that DXY, medium to long term, DXY or dollar index is expected to go up or is expected to be bullish. But now I'm actually talking specifically about each day, what you expect from each day as a day trader. For those of you that actually trade what's called daily, okay, for those of you that actually take intraday trades, this is actually a video for you guys. Okay, so let us talk about DXY first. And before we do that, I want you to pay close attention to what I have written above here. Okay, let me take attention to this information here. Okay, this information I have right here. You can take your time to read them when you have when you're free time. You can actually take time to actually go through this again so that you can perfectly understand what I'm trying to point your attention to. Okay, let's read this together. Rules to determining daily bias for day traders. One, for a bearish day, we should typically expect price to go up and sort out any form of internal or external liquidity. Two, for a bullish day, we should naturally expect for price to do the opposite, that is going down first to sort out any form of internal or external liquidity. Okay, and when in a bearish day, naturally we should naturally expect for price to go up and do what? To sort out any form of buy side liquidity, be it internal liquidity or external liquidity. Why for a bullish day, we expect price to go down first to sort out any form of sell side liquidity, be it internal liquidity or external liquidity. Now, the question that brings us to the question, what do we mean by internal liquidity? Okay, internal liquidity are actually zones of institutional interest where prices are expected to either mitigate, reprice, and rebalance. Okay, examples are your order blocks, okay, your demand and supply zones, your gaps, fair value gaps, and any form of imbalances. All those are what we call internal liquidity, where we expect price to come to mitigate, where we expect price to come to rebalance. Okay, and external liquidity are mostly pools of liquidity where accumulation of stocks are most likely to reside. Okay, those are where most retail traders actually place their either sell stops, buy stops, okay, below swing or below swing lows, below swing highs, below relative equal lows, double tops, double bottoms, trend lines, and so on and so forth. Those are what we call external liquidity. Okay, the algorithm has just one mission, okay, guys, so that you would not always think that the algorithm is always trying to hunt you or actually trying to fight against you. Okay, the algorithm only has one mission, guys, and that is to ensure that there is balance in the market. Okay, and it does this by efficiently delivering price to fill up the orders of central banks. Because see, whatever it's actually doing is what it is programmed to do. It does that to actually try to make it easy, you understand, for the large orders of central banks to be placed efficiently in the market. Okay, so remember, the central banks are the liquidity providers or market makers. Now, we're going to be looking at DXY first. And now, DXY or dollar index is predominantly bullish, medium to long term. But now I am talking about today, the uniqueness of today. What am I expecting for today? That is the question. Okay, so for a bearish day, because in DXY today is going to be mostly uniquely a bullish day to me. Okay, that's my expectation for today. So what do I expect? I expect for price in DXY, okay, to do the okay. I expect for price to go down first to sort out any form of internal or external liquidity. You understand? I expect price to actually try to take out yesterday's low, that's previous day's low. You understand? To take out um some kind of swing low first, okay, and actually try to balance or rebalance or mitigate anything sell side. I need the sell side part of the marketplace to be sorted out first before we can actually expect the push back up. So now pay close attention to the previous day's high and the low on the daily time frame. This is one thing you should actually note and mark it out. If you're expecting the bullish day, just like we are expecting in DXY, okay, remember that in a down, even in a what's it called, even in a long term, medium to long term bullish trend, we can actually have some bearish days in between. So speaking specifically on those uniqueness, those unique days in the market. So in DXY or dollar index, we'll be expecting a bullish day. Okay, and for a bullish day, what are the rules? You should expect every form of sell side inefficiencies, every form of sell side imbalance, every form of sell side liquidity to be sorted out first, to be handled first before we can actually look for buys. Okay, and that is what we are expecting in dollar index. Okay, now let us pay attention to what we have here. We can see that dollar index has actually gone to mitigate its order block. This is BMS, breaking market structure. Okay, that's your BMS right there. And now we can see an order block right here. Okay, though my own interest is actually this candle right here. This is my interest here, but the other block is still in line with it. Okay, so here we have what your fair value gap, and that is what I actually pointed your attention to in my previous video. If you have not watched my previous video on how anticipated for price to fill up this gap and reach down to this level, you can actually take your time to go see the video. It's very important, guys. Okay, and you can see how price perfectly fill in this, repriced into this fair value gap and has rebalanced it. Okay, you can see perfect fill. let, let me draw this fair value gap to the low. Now how do you draw a fair value gap? We have a high volume candle here or a large volume candle here. Our bullish fair value gap is drawn from the low of the candle in front of it, and we are talking, and we pick the high of the candle behind um, the high volume candle. That denotes our bullish fair value gap in this case. Okay, so now in for today, what do I expect? I expect a bullish day, but for a bullish day, what are my expectations? I expect sell side to be sorted out first. Then we can actually begin to look for buy side. And when sell side is not sorted out first, you have nothing to trade. Okay, once your expectations are not what's called met, you have nothing to look for. That is actually what's going to make you take the right trade and not to just FOMO in for the wrong reasons. Okay, you actually have to look for your narrative, logical reasons why you should actually buy or sell. So in this case, for a bullish day, I expect price to come down because I'm really expecting a bullish day because this is actually the reversal I've been waiting for in DXY. Okay, the bullish reversal, the bullish continuation. You can see that the part of this resistance in dollar has actually been to the upside. Okay, a high, a low, higher high, higher low, and so on and so forth. So the part of least resistance in the dollar is to the upside. So I perceive that this should be the bullish continuation. You can see how price reacted to the other block. Okay, price impulsively moved up. Okay, what is that trying to tell us? It is trying to tell us that there is possibility that this is actually the reversal. You understand, the continuation for the buy side. Okay, so for today, I am expecting for price to come down, go below yesterday's low because it's actually kind of close. Okay, so it will actually try to create some kind of inducement. Okay, first it creates sell side buy side inducement or buy side liquidity, then intentionally comes deliberately creates that, and then comes down to either take out yesterday's low, mitigate anything that has to do with sell side first, okay, or rebalance anything that has to do with sell side before it continues back up. So let us scale down to the 4-hour time frame. Okay, Now, I want you to pay close attention to what is going on here. Pay close attention to what is going on here. Okay, here we have yesterday's low. Okay, and here we have yesterday's high, the previous day high, and this is the previous day's low. So now remember my expectation for price to mitigate anything sell side or to sort out everything sell side first before we expect bullishness. Okay, and now we have in yesterday's low, you can see some relative equal lows there. Okay, so that's actually something very, very good to spot. Relative equal lows. Okay, those are relative equal lows and it can be viewed as pools of liquidity. Okay, pools of liquidity. And what is that? An external liquidity, external sell side liquidity. Okay, so that is one of the first things I expect them to sort out first. This external sell side liquidity. You can see clearly on the 4-hour time frame, we have it there. Okay, so I expect for price to really purge yesterday's low, clearing every what's it called liquidity or stops resting below here, this relative equal lows, and for price to really give us a discount price to buy. Okay, since we are looking for buys, what is the wisest thing to do or the smartest thing to do? To really look for your buys at discount. So the more price actually reach further into discount, you can actually be looking at this order block or you can be looking at this zone here. There's a hidden order block right here. Okay, there's a hidden order block right here. So I expect for price to really take out yesterday's low, probably go to the hidden order block here or to this order block right here and mitigate them before we can actually expect buy side. Okay, though I'll be leaning more to the first order block I drew and not the second. I'll be leaning more to this, but there is also potential for price to reach out to this level as well. Okay, because here we have our order block and a hidden order block right here. Okay, if you scale down to lower time frame, you can actually find it. So my expectation is for price to sort out everything sell side. You can see relative equal lows resting below yesterday's low, and you can see our hidden order block right here and our order block right here. So if we want to buy, we expect everything sell side to be handled or sorted out, then we look for discount prices before we can actually look for buying opportunities. That's the smartest thing to do. Okay, so that's that about DXY. Let's move on to AUD USD. Okay, for AUD USD already met my expectations already. My first expectation for a bearish day. First, you can see that AUD USD is actually reacting to this other block. If you scale down to lower time frame, you can actually find out the exact level. Okay, where AUD USD is reacting to before it actually got down. You can remember that AUD, the central bank actually released an interest rate news on AUD. You understand? It came out as expected. Naturally, um, uninformed traders will actually want to buy AUD USD based on the fact that they would actually increase their interest rate. But the fact is that AUD USD, the fact or the expectation of the increase of the of interest rate in AUD USD in Australia Australia dollar was already priced in. Okay, so the bias has already been priced in before the data was released. And when the data was released, we should naturally expect a sell off. You understand? Remember, buy the rumor, sell the fact. Okay, the rumor has already been bought up to this level. You understand? Because the increase was already expected. So smart money would have already bought. And when data was released, we should have expect a sell off. So now, what is the expectation on AUD/USD? AUD/USD, so, just like every other foreign currencies, are actually bearish. Okay, medium to long term, every foreign currencies are bearish, inverse to what we expect, or opposite to what, contrary to what we expect in DXY. Remember, DXY dollar index is what we use to track the dollar. Okay, and if dollar index is actually bullish, what do you expect for foreign currencies for them to be bearish? So for today, I actually expect a bearish day. Okay, I expected I expect a bearish day today coming into tomorrow as well. Okay, so I expected yesterday's high to be taken, and that it has already done in this case. Okay, that it has already done. So what we have to do is to scale down to the lower time frame. Let us go to the 4 hour time frame and then look for zones where we expect to actually buy from. We can see that this fair value gap right here should be our first area of interest. That should be where our eyes should be glued to first, looking towards this fair value gap, expecting it to be filled. And you can see that price is really repricing into it already. So I expect a complete reprice of this fair value gap. So a complete reprise of this fair value gap. Remember, for a bearish day, you should expect everything buy side to be handled first. Now you can look at yesterday's high. It has been the liquidity resting above yesterday's high has been taken, okay, and above this swing high right here, liquidity resting above there has also been taken. So um, I'm not so conversant with trading V. I'm just beginning to what's it called understand how to use it. So forgive any clumsiness. So I'm pointing your attention to where liquidity resides buy side in this case AUD USD. Okay, liquidity is actually resting above yesterday's high. Remember, this is yesterday's high. Let me take your attention back there again. And I think I would have to change the color of. Okay, okay. This is yesterday's high. This right here. Okay, and even on the daily time frame, this actually denotes our fair value gap. The high here, the lower of this candle in front of this high volume candle and the high of this candle here. And you can see that on the daily time frame, the fair value gap has already been filled on the daily time frame. So this actually denotes for the fair value gap on the 4 hour time frame, the one listed above here. So let me change the color of this one here. That denotes the high of previous day. Very good. So we can see that the fair value gap on the daily time frame has actually been filled from here to here. Okay, just go back and check it out. And on the 4 hour time frame, you can actually see a very big imbalance here. Okay, your fair value gap. So I expect the fair value gap to be filled up as well. Okay, so in a bearish day, I expect everything buy side to be sorted out first in form of everything what's it called in form of external liquidity, in form of your internal liquidity, every form of liquidity buy side, internal and external. So in this case, you can see that external liquidity has been handled here. Yes, it is high. Liquidities will be resting above the external liquidity, buy side external liquidity right here too. Buy side external liquidity that have been handled, and here you can see a relative equal highs right there. Okay, so price has actually sorted that out. So I expect for price to still reprice into this fair value gap, okay, giving you premium price. Remember, as an astute investor, I would actually expect, or an informed trader, I would expect you to know that more profit is actually made if you sell at premium and when you buy at discount. So what we actually what's it called look out for, okay, for a bearish day is for price to go into premium. Okay, so you actually have to be looking for your area of interest at premium to actually sell off. That's just the idea. So everything buy side should be handled first, okay, before you can actually expect bearishness. So here I'm actually looking at New York session to actually give us our sales. Okay, so I'm actually waiting for New York Q zone on New York session. Then we can actually begin to look for ourselves, and by then I expect price to have refilled or kind of rebalanced this. Okay, so that's my expectation on AUD USD. Let's go to Euro USD. Okay, I also need to also point your attention to what has been going on sell side. You can see some sort of relative equal lows. Okay, so sort of relative equal lows right here. That should be your next target. Okay, because if you're expecting a bearish day after buy side is being handled, you should actually have what's it called, your plan, your narrative. What are you expecting sell side if you're expecting a bearish day? Once your bullish once your buy side inefficiencies or imbalances has been handled, what are you expecting on the downside? You can see relative equal lows right here. Okay, you can see relative equal lows right here. You can see our imbalance here. Okay, so I expect price to really gravitate into this level here as well. This is the level I'm actually waiting for price to gravitate towards, into this fair value gap right here ultimately. Okay, you can see a relative equal lows, lows. Okay, so I expect all those to be my sell side target as price starts going down. Okay, and again, this idea is actually going to be maintained so long this high is protected. So I want to see this high being protected. Okay, then if that is being protected, or if it is not, if price doesn't close above this high, then I expect everything I have mentioned here in AUD USD to hold, and same goes for DXY. So long this low is being protected and price doesn't close below the low, then we can expect this idea to actually pan out. So let's go to Euro USD. For Euro USD, we have something similar to what we have in DXY, but just the opposite. Okay, because DXY is mostly weighted against the euro. So whatever idea you have in DXY, you can actually anticipate the reverse of the case in Euro USD. So in the case of Euro USD, you can see the high is already marked out here. So I expect the high to be taken out. Yesterday's high to be taken out, and for price to actually sort out every form of external and internal bars. Or remember, just note what I'm actually pointing your attention to. Sometimes you might not actually have both internal and external what's it called, liquidities. Okay, sometimes you might just have just internal liquidities to handle, and some days you might actually just expect internal liquidity to be handled. But in this case, I expect both internal and external liquidity to be sorted out in this case in Euro USD. You can see here we have yesterday's high. Okay, I've actually noted it by this line right here. Okay, I want to also point your attention to how price has actually fared. Buy side liquidity has been totally handled just like I expected. Though price didn't actually reach out to the level I was expecting 1.03600 levels. Okay, I was expecting price to really give us a very good push up into this imbalance right here on the daily time frame, but price didn't give us that. Price actually just took out every buy side liquidity that they have been accumulating deliberately. Okay, they have handled everything buy side. Though I would really love for them to clear this, mitigate this fair value gap here. I would really love to see that happen. But so long DSY has actually done what was expected of it. Okay, so we can actually say that that fair value gap right there might be left behind because DXY has actually filled up his own while Euro was actually stalling. Okay, Euro was actually just being neutral, just just kept on consolidating while this was actually fulfilling its own mission, filling up this gap and actually moving up. So the inverse in the case was expected. I expected the Euro USD to actually move up, okay, and do the same thing, but you can actually see that Euro didn't actually move so much. Okay, so but it actually did what was expected of it in anyway. We expected this buy side liquidities to be taken, okay, and we can see that price really came down, sorry, came up into our fair value gap as it was taking out external buy side liquidity here, okay, which was on Tuesday, and it actually went down. So here we had yesterday's candle, which was Wednesday. So what is my expectation today for a bearish day? Remember, I expect everything buy side to be handled first. Then we can aim for sell side. See this low, see this low, okay, before this daily fair value gap right here. So that is where I'm actually expecting price to gravitate into. So I expect yesterday's high to be taken. Then my next expectation is for yesterday's low to be taken as well, and for price to gravitate into the daily fair value gap right here. Okay, so that is what I'm actually watching out for. in Euro USD. So now let us scale down to the 4-hour time frame and see what we have there. Okay, for Euro USD, you can actually see this is some sort of accumulation, manipulation, sort of to the upside, and I expect distribution. Okay, in DXY, I think we actually had something similar there. Okay, that is what is actually going to frame your idea. Your narrative is actually what is going to give you um, a kind of clear expectation. So here we actually had an accumulation in DXY, okay, and price moved down into our area of interest. This was the daily zone of interest for the buys. Okay, we had an accumulation, manipulation to the downside. Okay, and naturally we should expect distribution above the accumulation. So this is your accumulation. Okay, accumulation, manipulation to the downside. Here, we had our manipulation to the downside, accumulation here, manipulation to the downside, then distribution above accumulation. So this should be our first target in DXY if we were to trade DXY. Okay, so I expect for price to give us discount prices, then we can actually buy into the high of the accumulation phase. Okay, that's that for dollar index. So still talking about Euro USD. Like I said, I expect everything buy side to be handled first. So this is an external buy side liquidity. Yesterday's high. So after yesterday's high is being handled, I expect price to actually go into this fair value gap right here because that's still very much not balanced. Okay, so I actually see that as an imbalance that should be filled up. Okay, and price might not actually reach there. Okay, price might not actually get to that level, and so long price does not actually what's it called, fulfill every of your expectations for a bearish day, you should not engage in the market. Okay, because you're just going to FOMO in and actually take illogical trades and put yourself in loss, and that's not what you want to do. Okay, so you should actually expect for price to take out liquidity because liquidity most of the time is just like should be viewed as fuel in the marketplace. Okay, so when you actually see price take out liquidity, you understand, you can actually see it as fuel to actually go the other direction or the main direction of smart money. Okay, so that's just actually what I'm expecting here. So you can see in Euro USD, it's actually wise to actually buy, sorry, sell at premium. Okay, so above here we have pools of liquidity. Let's scale to 2 hours time frame. Okay, okay, you can see that this yesterday's high actually coincide with this high right here, the high of that candlestick. So we can view that as some sort of relative equal highs. Okay, we can view that as some sort of relatively equal highs, and this denotes the fair value gap from here to here. Fair value gap on the 4-hour time frame. Let's scale to the 1-hour time frame. Very good. See this low, see this low. Very intentional relative equal lows, and this what's it called, that space here denotes the fair value gap on the daily time frame. Okay, so I really expect for price, like I said, I really expect for price to take out yesterday's high. You can see another block here, so potentially we can actually expect price to really key off from this other block right here after taking every form of liquidity resting above these relative equal highs right here and resting above yesterday's high. Okay, so this is what I'm really expecting, yesterday's high to be taken in Euro USD, and for price to key off from this other block. This other block is now area of premium. You understand? It's an area of premium, so we can actually see price gravitate towards that level, or for price to really go up here to mitigate, sorry, to reprice and rebalance this fair value gap right here. Okay, that will be all for today, guys. Okay, that will be all for today, guys. I'm looking forward to talking to you guys soon. Okay, and go back and actually backtest this. Go back and actually study what I have actually shared here. Okay, it will actually make your trading journey easier. Okay, trust me, guys, actually going to make your trading journey easier. So okay, I'm actually going to mention something here for GBP USD. Remember our expectation for GBP USD, um just like every other foreign currency, medium to long term is still bearish. Okay, so medium to long term we are still expecting bearishness. Okay, and today we're actually going to be looking forward to the interest rates news release coming up. I guess 8 p.m. New York time. Yeah, yeah. So I guess okay, we are just expecting the interest rates news release coming up on GBP USD. Most uninformed traders will really expect for price to buy off in GBP USD because they're actually increasing interest rates. So they would actually expect for price for GBP USD to do well. But we that actually understand the medium to long term bias in GBPSD. You can remember the medium to long term bias in GBPSD is actually to the downside, okay? And not just that, you actually know the fact that the rumor has actually been priced in, okay? The expectation of the rate hike has been priced in already, has been bought. So smart money has actually been buying GBPUSD for a while, okay? They already priced in the expectation of the rate hike. Okay, so I expect yesterday's high to be taken just like I expect in Euro USD as well. You understand? So yesterday's highs to be taken. So everything buy side should be handled first. Okay, then you can actually look for sell side. What's it called? Targets. Okay, so um on the 4 hour time frame, you can actually see that these guys are intentionally stalling. Okay, and you can see above yesterday's high, you can actually see some sort of relative equal highs resting above there. So it is very, very logical to actually expect for price to go into to run through this yesterday's high, okay, before we can actually expect for sales. Okay, so this was the level actually took off a trade off from yes and 2 days back. Yeah, yeah. So it's where I took trade 2 days back. Yes, on Tuesday. Okay, as price actually went into this level, okay, and gave us a sell off. Here was my target. This relative equal lows right here. As we got there, I got off. And now we can see that price intentionally created relative equal highs here, just like we had an intentional creation of relative equal highs above yesterday's high here in Euro USD. So it is very logical to expect for price to run through them and actually to key off from internal liquidities, our imbalances, our order block. Okay, this is an external liquidity. Okay, so for GBP USD, the external liquidity is yesterday's high. This relative equal high is here on the 4 hour time frame. Okay, and this imbalance here. So I expect price to really gravitate into that imbalance again. Okay, then really key off sell side. But this is my best expectation here for price to take out yesterday's high. Okay, for price to take out yesterday's high. And guess what, guys? It's almost time for what's it called, the interest rates news release that's coming up. So because I expect a massive sell-off in GBP USD, note what I am saying. I am expecting a massive sell-off in GBP USD. I can actually see a very, very good psychological number here, 1.22000. So price might not actually give us that boost we are looking for. So the closer it is to actually the closer it is to the time of the release and price is really around this level, it might just sell off from there. Okay, you can just sell off from there. So but my own personal expectation give us that push up here before sell side. Okay, so that will be it, guys. That will be it, guys. So um I really appreciate you for your time. Go back in your chat, back test everything I have actually mentioned here, study them and prove them to yourselves. Have a wonderful trading week.